Hi, everyone. Thanks for tuning in. Right, just going to give a couple of minutes for everyone to kind of stream in. Hi, everyone. Hi, Christabel. Nice to meet you from Philippines. Thanks for tuning in from Philippines. Right. So, yeah, if you guys say there is a chat button which you can click on, right? And what I've done is I've enabled sharing, right? So you guys should be able to see each other's messages. What I want to encourage you guys is maybe for a start, if you're tuning in, right, where you're tuning in from, right? Yeah, if you can share with everyone where you're tuning in from, right? It'd be nice to know like if anyone else is from like Singapore. We got Taylor from the UK, right? So when you're sharing, right, there's this function to like click and there's a drop down, which allows you to pick like everyone or host and panelists, right? So if you want to chat among each other, I recommend having that drop down for everyone instead, right? So yeah, so everyone can like more or less sorry, here we are. Everyone can more or less see where are we? See each other, right? Give me a second. There we go. Oh, we got Elliot from Nigeria. All right, just give me a second. We're just going to wait maybe a couple more minutes for the rest of us to stream in. All right. Um, Craig from Philippines. Right. So I actually got Craig and Christobel from Philippines. Right. Christopher from Northern Ireland. Nice to see you tune in. Right. Thanks for taking the time to come down, attend this session. Right. All right. From Thailand. Right. We got Atikun from Thailand. Right. And we got Ibitayo from UK. Right. Quite a couple of you guys from Nigeria. Right. Funny name that you're using. Tasty as usual. Right. Okay. Let's see. All right. All right. Paul from Uganda. Right. And yeah, maybe if you can, I guess while we're waiting for just another 2 more minutes for everyone else to tune in, right? To tune in, right? If you guys want to share a little bit about whether you use technical or fundamental analysis in trading, right? Feel free to share, right? For me, I'm very heavy on the technicals, right? So I mainly use technical analysis to trade, and what I found is that it is possible, right? It is possible to actually forecast, the reversals of the market. Tend to be a little bit more of a contrarian style trader, meaning I play the reversals, right? So yeah, it's able to forecast it using technicals, right? Also depending on the time frame that you use, right? News can be affect you a little bit more or less, right? Emerson, right, from Philippines, and we got Dion from Africa. Thanks for tuning in, everyone. Right. Today's session, I hope to let you guys share with you guys on how you can trade like a full-time forex trader, right? I'll be sharing with you like what I feel would be the best, most important tips that you guys hopefully can learn, right? Learn the mistakes I made, and I hope everyone can avoid, right, on this journey. All right. Yeah. So interestingly, so Christabel mentions that it's heavy on technicals, but it's the fundamentals that move the market, right? It's the news events that move the market. If you think about it, right? When a war breaks out, right, or when a news release, like maybe in the crypto space, right? If like what's the word for it? Let me find a recent example, like the Fed, deciding that maybe they might not be lowering interest rates for a while. Those are the news events that are gonna move the market. But if you think about it, if you are trading on like a shorter term time frame, you'll notice that the movement is huge, and it might cause your trading strategy to be, to be wicked out or wiped out if you're on the 5-minute chart, 15-minute chart, you see that. But if you're on the 4-hour chart or the 1-day time frame, right, you tend to not even realize that there might be a non-farm payroll. The markets might be crazy, but on your chart, it looks like just a small little candle there, right? And almost as if you didn't realize it happened, right? So the news events, right, the fundamental news, the volatility affects the shorter term time frames a lot more. All right, so let's begin today. So how to forecast news direction before release. Someone was asking this question, right? Someone saying, how to forecast news direction before release. Not possible, right? I mean, there is econometrics that which you can use to really crunch data to try to forecast it, right? And there's usually most people, right? The sentiment. I think if you go to Forex Factory and stuff, usually there's a forecast there already, and it tends to be correct. The market moves when the actual result, is not the forecasted result. It's far away from the forecasted result, right? Yeah, so it's not all the time, right? So usually, right, like the market forecasts a non-farm payroll to be like that. If the actual release is the same, there isn't much movement. But if the actual release is far, that's where there's more movement, right? So usually, like some hedge funds, they use econometrics to crunch their own numbers to come up with it, right? Otherwise, I've tried it before. It's very difficult, right? The approach I use is more technical in nature. Okay, so let's begin today's session, right? So a little bit about me, right? So yeah, founder, CEO of Rocket, right? Pass a prop firm test, right? And I think the team here in Rocket, passed more than 15 times your best FX and best equity research, 2019, 2020, 2021, right? A recent certificate, just to show you guys, I have to blank out the name, right, of the awarding prop firm, because we don't want to endorse any, of course, in this IronFX webinar, right? But yeah, we've passed it. It's, I would say, quite simple pass. It's not easy to pass, but when you pass it, they give you funds to manage, right? So been there, done that, right? And I want to share with you like how you can some of the strategies I use, right, when it comes to passing this, when it comes to like trading profitably. All right. So of course, disclaimer before this webinar start, right, guys? Remember, everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So, please do your own due diligence before you guys trade. I literally have another screen open over here, right, monitoring the questions, right? So if you have a question, what I recommend you guys do is to send it straight away, right? Send it through. I'll do my best to answer them, right? And yeah, because usually at the end of the webinar, we might not have that much time to trade. I mean, we might not have that much time to go through all the questions. So if you have a question, don't hesitate to send it through, right? Someone, right, lost more than 25 challenges, right? Then you're at the right place to learn how to whether pass these challenges, or trade profitably, right? So it is a lot. The good thing is that I'm going to teach you guys technicals, a very very clear approach to trading, right? There's not going to be a lot of like subjectivity to it, right? So what I hope is that with this, you can then go off and at least improve your trading journey, right? At least to let you guys know what the agenda is for today. We're going to start off here, which strategy is the best, right? So a lot of times you're wondering, is there a certain trading strategy that performs better than the rest? If you guys, for those of you who are watching, right, if there are certain strategies that you use and would like my opinion on it, please send it in the group chat. I will just give you my my quick opinion on it. I mean, I've been trading for more than 10 years. I've seen a lot of different trading strategies, right? And the last thing you want to do is to run full speed in the wrong direction. Okay, that's the last thing you want to do, run full speed in the wrong direction. So that usually happens when you are using a trading strategy that is not, that is not a good, right? Or is not created on like stable foundation, right? It's just something that people threw together, right? And it might not be just by the basis of it, it might not be profitable, right? So if you have a trading strategy, you want to explain it to me, or you want to explain to the group like what it is like, right? Feel free to share, right? I'll give you my opinion on it along the way, right? So we'll cover which trading strategy is the best. What I think is the best, right? How much to risk on a trade, right? So usually when it comes to trading, there is a risk management is almost everything, right? Without risk management, and you have good trading strategy, you won't end up won't be making money with it. All right. I am seeing some questions. People send through their messages through the Q&A. All right. What I recommend you guys to do is to send it in the chat. There's a webinar chat over here, right? I'm going to say hi over here, right? Yeah, so please send it in the webinar chat instead, right? Not the Q&A, because it's two separate screens, right? And I think if you send it in the webinar chat to everyone, then at least everyone can participate in the discussions. All right. So oh hey, hey, Hush, sorry, my screen's a little bit small. Hush, Vardan, nice to see you. Thanks for tuning in. Right, we got a question earlier from Chandra Prakash. Right, is it okay to attend this if we are a complete beginner? Yes, you all the more you should, because you're a complete beginner. The chances of you running in the wrong direction, right, learning the wrong things is very high, because there's so much information out there. What I want to let you guys know is I'm not selling any courses today, right? I'm not selling. There's no like sales pitch to tell you to like pay $3,000 for a course today. There's nothing like that. This entire webinar has been sponsored by IronFX, right? So they've paid the cost, right? And I'm here just to teach, right? So I've seen a lot of people, use the wrong strategies, especially when they are new. When there are so many things they can pick from. We got support resistance, trend lines, right? We got Elliott wave, harmonics. There's so many things that we can so many different strategies which we can explore. And the worst thing you want to do is to begin your trading journey as a beginner using the wrong things, like maybe moving averages. Not too big a fan of it, right? So someone has been saying, what's the average time to be profitable? Very interesting question, right? What's the average time to be profitable, right? So if you learn the right things, I would say, in a week you can be profitable, right? Maybe with practice, in maybe a month you can be profitable, right? But if you learn the wrong strategy, you can trade for years, 1 year, 2 year, 3 years, and you still be unprofitable, right? So it's not a case of the average time. It's like if you begin on the correct foot and you learn the right strategy right from the beginning, you have the best chance of being profitable. Okay, right? Got a question: is higher time frame bot safe to use? I think you mean not higher time frame, right? High frequency trading, right? Is probably what you meant, right? Any bot is safe to use if the strategy is good. If you have a strategy that is not sound, it doesn't matter what the bot trades on, what time frame it trades on, whether it's high frequency or whatsoever, but it won't be profitable, right? So don't just get a bot for the sake of using a bot, right? If you get any trading indicator or EAs out there, you must know, right? It's not a black box. What I personally think is that if you want to be in control of your financial future, right? If you don't want to leave everything, all that you're planning for, to a random black box, then it's better for you to understand how to trade. And maybe, with ChatGPT these days, it's very easy for you to ask it to create a bot for yourself to trade. Okay, so learn the strategy yourself, and putting it into a robot, into an EA, into a script is very easy, right? People out there can do it, for a really cheap price, or even if you know how to use ChatGPT, you can even create these bots by yourselves. All right. So Craig is asking a question, right? Craig, if you can just toggle that to send to everyone instead of just hosts and panelists, right? Craig's asking a question: what book do you recommend to read for more knowledge? Trading in the Zone, right? Trading in the Zone by the late Mark Douglas. Go read that, right? It's a very good book on understanding the probabilistic side of trading and not letting your emotions get the better of you. Okay, we're going to touch, of course, on where to place your stop loss. Is there an ideal place to place your stop loss and take profit? There is an answer to that. Top 3 mistakes I noticed traders are making, and an indicator giveaway at the end. So yeah, let's begin, right? The first thing I want to teach you guys, right, is the concept of stacking probabilities. All right, so usually one of the main One of the main things that approaches that people take to trading is when they begin trading, they are always wondering, do I use support and resistance? Do I use trend lines? Do I use Fibonacci? Do I use moving average channels? There are so many different things you can use when it comes to trading, right? But the answer to that is that there actually isn't, right, the ideal trading strategy. And I've been on this path for a decade, right? The ideal trading strategy is not a case of a single trading strategy. Instead, it's like these rocks over here. To reach here, you need to stack it in the correct proportions to get the best chance of being correct. Now, what I mean by that, of course, you must stack the correct stuff. You can't stack like indicators, like no, you can't stack oscillators like stochastic, RSI, MACD. They are all telling you the same thing, right? Just at a different indicator. So you might get a false sense of confidence if you stack the wrong indicators, but you must stack the correct indicators. You must stack one from momentum. You must stack one from your support and resistance. You must stack one from ideally Fibonacci. You must ideally stack a oscillator like stochastic RSI, right? And lastly, you must use correlation, right? So these 5 things, right, could of course I'll be showing you examples of it on how it can actually help you move to be a profitable on your journey to be a profitable trader. Okay, so this is an example. All right, so we have a example here, right? So this, if you notice, let me see if is there a way I can draw on this? Good question. Well, I don't think I can draw on this. Nope. Okay. All right. I can draw on it with this though. With annotate, right? So right, you can see that price is going down, price is going down, price is going down, right? It's going down, going up, going down, going up, down here, right? And now price is making a pullback, right, to this level. So this is what we call a pullback resistance, right? So the reason why this works, right? Let me just give me a second. I need a mouse. Just give me a quick second, all right, guys. I'm just going to connect the mouse so I can draw it easier. All right, I'm back. All right, so let me show you guys over here, right? So this is an example where it's what we call a pullback resistance. Okay, a very, very nice pullback resistance, right? The reason why this is good is because when price came down to here and it bounced, right? It bounced one time, it comes down to here again and it bounces again. And it comes down to here again and it bounces again, right? So a lot of people are actually looking to buy at this level because they think that price is gonna, it's gonna rise, right? It's gonna rise. But what happens is that price actually breaks and it comes down, right? So those people who initially thought that price was gonna rise, right, are now holding onto their positions, buying positions, and they're being taken for a ride of their life, right? Price goes down, you lose money, lose money, lose money, and they're like, oh man, I'm never going to trade again. This is terrible, right? I should have used a stop loss, right? I thought price was going to bounce, right? And as price starts to come back, they start to see, a light at the end of the tunnel, right? And price comes back, comes back, and when it finally comes back to here, what are they going to do? They're going to get out of their trade, right? Because they have been put through emotional turmoil, and they're like, forget it, I'm getting out of this trade, right? So they would close their long positions. Closing their long positions would mean that they sell, causing price to have a little bit a chance for price to reverse, right? This is like resistance, okay? So this is the first example. Basic support and resistance, you can relate to that, all right? Is that Shawnette, right? Yeah, so this is an example, right? It is technically called the pullback resistance, right? Or pullback support. Okay, so okay, we got this over here now. Now let's move on to the next example. So not only is there a pullback resistance, but there is a very nice channel, right? Now, have you ever been swimming, right? Have you ever tried to swim in the sea, right? In the ocean, right? When you're trying to swim against the waves, right, it is very difficult, right? You're trying to swim, and every time you swim a bit, the waves kind of push you back a bit, right? You try to swim again, and then it push you back again, right? So it's terrible, right? You can't even move forward, right? But once you turn around and you try to swim in the direction of the wave, right? You notice it's very easy. You're swimming, and the wave push you, and and you just say it pushes you along, and you can get to your destination more quickly, right? So that is a concept of momentum, right? So naturally it is better, right, to trade in the direction of a trend. This is an example using a channel. There's a proper way to draw it. We go into more details of this later, but there's a channel over here, right? So there's a bearish channel. The bearish channel happens, is bearish. This pullback resistance that we talked about over here is also a bearish signal. We got two reasons why price might reverse from here now. Okay. Then we throw in the Ichimoku cloud. There's this bigger concept, the Ichimoku Kinko Hill, right? A lot of different lines that draw, but one way I use it, and I think that you could use it too, is just to remove everything and just leave the cloud, right? The cloud by itself will tell you the general momentum of the chart, right? And what I like to compare it with, right? What I like to compare it with is like the clouds in the sky, all right? Is it going to rain very heavily today, or is it not? A lot of that depends on the clouds in the sky. When you look at the sky and you just see a single tiny cloud, you're going to be like, it's not going to rain today. But if you look in the sky and you see like a massive cloud above you like this, right, then you'll be like, all right, it looks like it's going to really, really rain today, right? So the Ichimoku cloud gives you a very good indication. If it's a very big cloud like this, which is above price, then you can say with a degree of confidence that, hey, looks like it's a pretty strong cloud, right? We might be seeing a bearish, price drop further, right? So that is another way to use the Ichimoku cloud, right? I like it because it forecasts a little bit into the future, right? You can see like the Ichimoku cloud doesn't end at where like the candle is, right? It actually forecasts a little bit into the future, right? For those of you guys who can't see, right, it's actually over here, right? It forecasts a little bit into the future over here, right? So these are examples where you notice when price tried to break through, right, there was a very strong cloud that prevented it from breaking through, right? You can see it tried to break through over here, it failed. It tried to break through over here, it failed. Now, this by no means that it's going to be by Ichimoku cloud itself is going to make you money, right? It's just one of the indicators that you are using, right? So remember, talk about stacking probabilities, right? So in this example, right, we are basically stacking probabilities, right? We now have the channel, right? We got the pullback resistance, and we got the Ichimoku cloud, right? What is going to happen next, right? The next probability that we're going to use is Fibonacci. If you know how to use Fibonacci, even better, right? It's a very advanced concept, and in my opinion, one of the best, right? One of the best. It's very difficult to use. A lot of people are going to teach you how to use it wrongly, but if you learn it properly, right, you can, and that could be the difference between you being an unprofitable trader and profitable trader. You need to know how to use Fibonacci correctly, right? We might have a whole nother session. I'm going to tell you at the end of this webinar how you can learn Fibonacci properly, right? It's a special program that IronFX has. It's free of charge, of course, right? But I'll tell you towards the end of this session. Okay, so stick around, right? So Fibonacci, very nice Fibonacci starting point all the way. Do I have a highlighter instead? Yeah, I have a highlighter. Starting point all the way up here, right? And your ending point all the way down here, right? You notice the 23% Fibonacci right about over here. Okay, so price is testing the 23% Fibonacci retracement. Okay, now this is a long-term Fibonacci. Let's throw in, right? Let's throw in a little bit of a short-term Fibonacci, right? And you can see a short-term Fibonacci over here, all right, short-term Fibonacci, like starting point, middle point, ending point, and it projects upwards to over here, right? This is going to be a little bit more advanced, right? So don't worry if you don't understand, right? So Christabel is asking what the Fibonacci levels you look at. All right, so I'm going to say it real quickly here, right? For Fibonacci retracement, 23, 38, 50, 61, 78, right? For Fibonacci extensions, which go beyond 100%, right? It is 127, 138, 161. For Fibonacci expansions, which go below zero, right? It's negative 27, negative 61.8. For Fibonacci projections, which is projecting in the future, 61, 78, and 100. A lot of that, but don't worry, right? We'll touch on that maybe in another session, but I'll teach you how I can teach you guys on this Fibonacci next time, all right? So Fibonacci projection, Fibonacci short-term, Fibonacci retracement, as you can see over here, starting point there, all the way to ending point. You got a 61.8 Fibonacci retracement. You got a big 23.6 Fibonacci retracement. You got a big 78.6 Fibonacci projection, right? So, man, you're adding up a lot of different Fibonacci now, right? It might seem complicated, right? Not every single step you look at will look at this, but the ones that do happen to have everything lined up, right? You're looking at like 70, 80% chance of being profitable, right? So with that, right, that is where that is the, if you ask me this, I wouldn't say the silver bullet, right? But that is the secret that you guys need, the blueprint. It's the concept of stacking probabilities, right? So let's just say if all of these things lining up, all right, with all of these things lining up, we then have a, there we go. We got, let's just say, you know, we got, let me just draw it out over here. We got the first one is support and resistance, right? Support and resistance, maybe I give myself, maybe sorry, not this, right? I give myself maybe 30% chance of being profitable, right? Got maybe a 30% chance of being profitable over here. Oh, can I just write it out? Sorry. Yeah. So maybe over here, you have a 30% chance of being profitable, right? Then we have the channel, not that great. Channel maybe just a 15% chance, right? That affects the chances of you being profitable. Okay, major Fibonacci retracement by itself, if you use it, might not be profitable. All right. Then of course, we got the smaller term Fibonacci's. Let's throw in, right, this short-term golden ratio Fibonacci. May I give it about 10%? Right? Maybe this 78.6, also another 10%, right? And I maybe this, and over here, maybe the Ichimoku Cloud 5%, right? Notice by themselves, they're not gonna be profitable, right? By themselves, right? This one is probably gonna give you a 15% chance of being profitable. This one only gives you a 30% chance. But you add them all up together, 30 plus 15, 45, 60, 70, 80, and maybe got 85% chance of being profitable, right? So it's the stacking of probabilities that will put the markets in your favor, put any trading setup in your favor. It's a stacking of probabilities, right? But notice I am using different studies, right? I'm using channels, right? I'm using Ichimoku. I'm using support and resistance. I'm using, in this case, long-term Fibonacci. I'm using short-term Fibonacci. I'm using Fibonacci projections, right? I can throw in other stuff, right? Maybe like Fibonacci expansions, right? Maybe I can throw in like candlestick patterns, right? Maybe I can throw in a little bit of Elliott wave, but all of that adds up the probability. Notice by itself, a single trading strategy won't help you make money, right? Like just maybe trading on support and resistance alone. But if you combine them, that's where the magic happens, right? And it's not easy to combine them, right? So it actually needs to go through a lot of filtering before you find a nice setup. But that brings us to the next topic, right? How much do you then risk on a trade, right? And if you guys are over here, you can, oh yeah, so in this example, you know, we have a sell entry, stop loss, put it slightly above, take profit, put it slightly below, before a major level, and yeah, you know, price could drop down and hit his take profit. Okay, this is more trade management. Let's talk about risk management. Okay, risk to reward. Okay, risk management. Now, for those of you guys who are here, right, if you may, I encourage you guys to just participate with me, right? You have a roulette table over here, All right. You're only allowed to play the roulette table once. You're only allowed to play the roulette table once. All right. You have $100. You're at a casino, you have $100. How much would you bet? If you had to bet on black, right? So let's just say, all right, you have to bet on black, right? And you only have this one chance to bet on black, right? How much would you bet on black? Right? If you guys are here, right? Paul, Christabel, Shonette, right? Craig, yeah, can just share with me like you got $100. How much are you gonna put on it? Right? We got Craig at 30, Shonette at 20, Alan 1. Just say you need to play, right? So you can't just not play, right? Christopher's at 49. Interesting, right? I mean, that's more or less a probability, right? So yeah, we got Elliot at 10, 23, 30, 4 5. All right. Okay, right. Chandra at 30, Paul at 10, 50 by Marciech, right? So yeah, you notice that the numbers are around 10, 20, 30, sometimes less than 10, right? Sometimes more than, seems that the highest you ever go is 50. All right. Now, let me give you all right, and that is understandable because your chance of winning is just like maybe 50-50, right? So I will give you a new roulette table. This is my new modified roulette table. You can only play it once, right? There is 32 black and 4 red. You have the same $100. How much would you bet? Right? I think the probability is about you probably have about 88% chance of being profitable. About 88, right? We got some people coming in at 80, 80, 90. Shonette, personally for me, I'm going 100. I could throw in the full 100, right? Christabel, you only got $100. You can't bet $1,000 unless you go to the ATM and like take out some money and stuff, right? Right. We got Dion 75, right? Muhammad at 30, right? Interesting 30. Taylor still very risk adverse at 40. Elliot at 50, right? You notice that the numbers go higher, right? Alan's at 10, so I'm very conservative guy, but remember, you only got this one chance. After this one chance, it goes back to the normal roulette table. I am bringing you a special table just to roll once, right? Most of you guys increase your risk tolerance, how much you are betting, understandably, because you have a higher chance of being correct. And that is the concept behind trade management, right? Trading is not a case of yes and no. Do I trade or do I not trade? It's actually a case of do I, maybe you have three, oh my goodness, I'm not even going to bother to try to draw this. Yeah, you have maybe 5 check boxes. Okay, like I gave you 5 check boxes earlier, right? So you have 5 check boxes over here, right? Maybe if you're one tick, you don't trade, right? It's a no. You don't trade if only one criteria is met. If you have 2, maybe you can risk like 0.5% of your account, right? 0.5% of your account. If you have 3, that's where you can increase to 1. You got 4 things that are lining up, you can increase to 1.5. And when you have 5 things that line up, maybe you can increase it to 2%. You can increase it to 2%. So that's the concept of trading, right? It's not binary yes and no, it's yes and how nice. If it's so nice as like this roulette table over here, it makes sense to allocate more risk to the trade, right? Someone answer that question later because it's a bit different from what we're talking right now, right? So yeah, this is the concept, right? That if the odds are in your favor, increase your risk allocation. You can only know whether the odds are in your favor if you have clearly defined kind of like check boxes as I've shown you over here. If you don't, you'll never know. So don't leave things to subjectivity. Always have a clear criteria on how you're going to trade. Okay. Now moving on to the next one, right? I think we're reaching prices soon. Trade management. There's a lot of things that goes into a trade. I will teach you guys over time, right? There's entry, stop loss, take profit, and that is just the basic. And we can go all the way to break even, idea invalidation, all the advanced stuff. This, honestly, sadly, guys, is what it takes to be a good trader. You need to know when to get in and you know when to get out. You must know when you're right and you must know when you're wrong, right? Idea invalidation is an example where there's a popular cousin of idea and validation, which is break even. Everyone knows what break even is. Move your stop loss to your entry. Hooray, right? I mean, a risk-free trade. Idea and validation is the opposite. You move your take profit to your entry, and you're basically saying, oh crap, I am wrong. I need to get out of the trade as soon as possible. That's the concept of idea and validation, right? And there are ways to do that. I can teach you guys over time, right? But yeah, once that happens, every loss you avoid is money made, right? So a lot of people just think about making money, but you need to think about loss avoidance. If you lose 1% and you make 1%, you're zero. You're still at 0%. So every loss you can avoid is money made. Okay. So to the mindset of a full-time trader is that you need to not only learn about profit maximization, making more money, right? But you also need to look at the other side. How can I lose as little money as possible? And I can share with you, right, the approaches there. There are a lot of things I can teach you guys, but maybe one of the key things that I will share with you is the concept of stop loss and take profit, right? Hopefully I can just teach you guys this today. I'll teach you the more advanced stuff later on, but stop loss and take profit. Put your stop loss beyond a key level. Like if this is a major resistance level, you want to put your stop loss beyond. And if this is like a major support level, you want to put your take profit before. You can take a screenshot of this, you can write it down somewhere, but this by itself will help you avoid getting stopped out. Sometimes price just stops you out and then reverses, and you'll be like, oh my goodness, the markets are being manipulated. This is terrible, right? I can't believe they're doing that, but it's because of your stop loss placement. It's the same thing. Sometimes the market, right before it reaches your take profit, it reverses, and you're like, what in the world happened, right? It's all a concept of stop loss and take profit placement. Let me give you an example, right? So in this example, same thing. We expect prices to go up. We got a very, very nice support level down here. Look at this, right? Price has bounced off this level multiple times, bounce off once over here and bounce off twice over here, right? Clearly, right? So Mohammed said, literally just happened to me on Go. Yeah, so let me show you why that happens, right? So our strat, let's just say we go to like baby pips, we go to Forex Factory and they have this trading strategy, right? It doesn't matter what time frame, Taylor, right? It doesn't matter what time frame. This can be any time frame. All right. Just remember, I deliberately removed the time frame just to emphasize this. It doesn't matter what time frame you're on, right? I could tell this is 5 minutes, 1 hour, 4 hours. Does it really matter if you think about it, right? Because they all look the same if you remove the time frame. But technical analysis just mainly looks at charts, right? So let's just say we're on baby pips and we have a strategy that we found from Forex Master 101 that says that you need to have a stop loss of 100 pips, right? Our trading strategy is to enter here, but the 100 pip stop loss is right over here, right? This is our stop loss, right? Because Forex Master 101 from baby pips tells you that that should be a stop loss, right? So, being the good students that we are, we just have a stop loss here, even though it is right above a key support level that we've identified over here, right? It's a big support level and there's, price is right above there, right? Now, what happens, right? Remember my previous slide, right? My previous slide literally just said that make sure that your take profit, your stop loss is put beyond. The reason why that happens, right? So let's see what happens. Price reverses. We thought that it was going up. It starts to reverse. And look at that. It stops you out right over here, right? Right over here. It stops you out. And then it starts to reverse. Why did that happen? It's because price is attracted to these key levels. And when it's attracted to these key levels, the last thing you want to do is to put your stop loss right over there, right? You want to put your stop loss ideally a little bit further beyond, right? Give it a little bit of a breathing space, right? So this is the concept which will save you a lot of money, right? Just putting your stop loss, adjusting your stop loss a little bit beyond. Nothing wrong with using a fixed stop loss as a gauge, that it should roughly be 100 to maybe like over here might be 110 pips, right? And of course, when that happens, right, if you employ like a dynamic kind of stop loss, right, what could happen is that you put your stop loss just slightly beyond, as you can see over here, price reverses, touches this level, and it reverses, right? So you don't get stop loss, you don't get stopped out. This is what I mean by having a stop loss just slightly beyond a key level of support and a key level of resistance. All right, this is exactly what I mean. All right, the same thing with take profit. Let's just say, we have an entry over here. Our original take profit is right at the wick. A lot of you guys like to do this. Put a take profit right at the wick, at a major swing high. You like to put your major swing low, right? You guys love to do your strategies that way. What do I recommend that you guys do? We put our stop loss right before the key level, not at where the key level is, but right before. Let me show you why. Right. So in this example, right, we then do a little bit more analysis, right? We do a little bit of Fibonacci, and we realize that the 78.6% projection is over here. So instead of putting our take profit over here, we shift it up a bit, right? So our take profit now is over here instead of being at the all-time low over there. Okay, what can we do with this, right? We can then put our take profit and look at it. Price comes all the way down, it touches the take profit, and then it reverses, right? Notice if we put our take profit at where the major swing low was, it would not have reached there. You would have lost money. This trade rather would have ran all the way to your stop loss, and you would have missed out on the trade because your take profit was at the major swing low. All right. So that is the concept which you need to learn when it comes to stop loss and take profit placement, right? I'm trying to teach you guys. This is, of course, you take this and run with it, right? Stop loss, put it beyond, take profit before, right? And that would have, that will help you avoid cases where, the trade misses your take profit. You look at it and like, oh my goodness, the market is manipulating, right? It's reversing and it hits my stop loss. I was just that close to it. This is the reason. This is a psychological reason behind it. All right. So Govenda asked, with a larger stop loss, will you adjust your lot size? Yes. Your lot size determines your risk, right? So with a larger stop loss or a tighter stop loss, you should reverse calculate, right? Meaning that if you are going to risk 1% of your account, 1% of your account from here, entry to stop loss, this might be like one lot, right? For example, right? But if your stop loss is over here, to risk the same 1% of your account, because the distance is double, right? Maybe so your lot size would be 0.5, right? But if your stop loss was over here, then your lot size would be 2, right? So it's all mathematical. Decide how much you're risking on a trade, go to an online Forex calculator and reverse calculate what lot size do I need, such that if my stop loss is hit, I would lose just that amount of money. Okay. Now, let me see over here, right? So we have touched on this. I'm going to touch on the top 3 mistakes that traders make. Okay. The top 3 mistakes that I notice traders make. Okay. The first mistake, don't set a daily target. I know you guys read a lot about, trading Forex like a business. You guys like to set a daily target, right? You set a daily target and be like, I want to make 1% for the day. The problem with that is that, let's just say, you're at 9 p.m. It's, or maybe it's the weekend. And I tell you, all right, let's just say someone, all right, Taylor, it's the weekend now. Go trade Forex and make 1% on the market. You would look at me and you'd be like, you are crazy, right? The markets are closed on a weekend. I can't trade, right? There's no liquidity. There's no opportunity. That is the same concept when it comes to trading. Imagine it's 11 p.m. You're about to go to sleep. You are at 0.8% profit, but you have set this random target of 1% for yourself. And you will look at it and you'll be like, I need to make 1%, right? If not, all is lost. I'm not a good trader, right? So you start looking at time frames, you start going down to the lower time frames, you start putting up different indicators just to chase that last 0.2% so you can make 1%. You end up compromising on your trade because you compromise on your trading strategy, right? Taylor's is guilty, right? You end up losing money, right? From 0.8% profit, go to 0.5, 0.2, 0.1, then you go negative. Then you start revenge trading. Then we all know what happens after that. Slippery slope. You'll be like, I should have just stopped at 0.8%, right? So don't set a daily target for yourself. Only trade what the markets give you. If the market is not giving you anything, don't trade. No liquidity, no volatility, and then there's no opportunity. Don't try to force a trade out of nothing. Alan, you have a question, just feel free to send it through. All right. Now, next thing, right? Yeah, nothing's worse than revenge trading. I agree, guys. Second mistake I notice people make, they only master a single instrument. All right. So there's a problem. If you are a euro dollar trader, right? There's no such thing as euro dollar trader. Euro dollar goes up, dollar franc goes down, DXY goes down, right? So everything is correlated, right? There's a little bit, Aussie dollar goes up, Kiwi dollar tends to go up. To trade profitably, it's important that you monitor these instruments, right? You see, okay, and that is how you avoid, right? That is how you avoid false breakouts. There are so many times where we thought price is going to shoot up, right? Like a breakout happens, is going to the moon. And when we decide to buy, suddenly it reverses and we're like, what the heck? You know, I just lost money. Why does that happen? You can avoid that with correlation. Let's just say whenever euro dollar goes up, DXY or dollar franc goes down. So technically, when one is having a bullish breakout, the other one should have a bearish breakout. They're moving in opposite directions, right? When the market has a bullish breakout for euro dollar, but the other one has not had a bearish breakout yet, it's still like, you know, it doesn't look like it's, you know, broken out of this key support level, then you should exercise caution. You would say there is a, you know, if you were a Jedi, you would say there's a disturbance in the force, right? There's something is not right, right? If they were all correct, one should be breaking out and one should be, both should be breaking out. But because one is not, something is wrong, I would hold back on this trade or maybe risk less on this trade. That's why it's important for you to master more than one instrument, okay? Third thing I want to share with you guys, right, is the concept of coaching, right? You need coaching to be profitable. Whatever I'm teaching you guys today, support and resistance, Fibonacci, channels, Ichimoku, you know, even harmonics, anyway, there's so many things that I'm teaching you and you're just touching on it just that little bit, right? Without practice, there is no way you're going to be profitable, right? How do you know if you're drawing that support and resistance level correctly, right? How do you know if you're drawing that channel correctly? What's the best way to do it? Is it some guy on Baby Pips or Forex Factory that's going to teach you? No, right? Or worse, you know, you pay a $3,000 for this Forex guru who's going to teach you how to trade, you know, and of course, all he wants to do is make your money. No, you're not going to make, that's not your way to be a profitable trader, right? Take it from me. I'm not selling anything, right? But of course, IronFX pays us, right? Because we they have covered the cost of this entire lesson. But what they have also covered the cost of is our this coaching program that they have. It's a 1-month coaching program. And right, it's free. Of course, you have an IronFX account, you get access to it. Let me show you how it works. Okay, this is what we call, of course, my team provides the technology, right? Yeah, become a Forex master in 7 days. That's probably like $1 million in USD, right? So let's just say you have this chart over here. You are the student, all right? I'm going to tell you, right? Okay, let's just say, you know, Christabel, I want you to draw support and resistance level correctly, all right? You come in here and let's just say, you know, you draw this level over here, bang, right? And you're like, oh man, I don't know if I'm correct. I just drew this level over here, right? I would then, right? So you're a student, you're in here, you drew this level, right? We have this special thing called coaching charts, right? Where, of course, we provided the technology to IronFX just for this purpose, all right? I would then come in here with my own account, right? And I would see, all right, there's a student over here who just drew this level. It is wrong, right? This is not how you draw support and resistance. I'm going to move this level to over here. So you can see Desmond Leong just edited this chart, right? I moved it from, you know, the gray dotted line you see there. I moved it from here to here. And I'm going to tell you, right, maybe as like a Christabel, like, hey, Christabel, you know, this is the correct level which you should be using, okay? This is the correct level that you should be using. Oh, I think I forgot to send a message, right? So I'm moving from here to here. When I go back to the chart over here, this is you, and you notice, oh, Desmond just told me that it's from here to here, and hey, Christabel, this is the correct level. All right, I get it now. Okay, so I'm able to edit your chart directly and tell you whether you're doing things correctly, right? I might tell you, okay, draw a trend line, right? And you just draw a trend line like this to here, right? So the student, draws a trend line from here. I come back over here and I look at it. I'm like, what in the world are you drawing, right? The trend line should be like maybe like this instead. Let's just say I move it like this instead. Trend line should be like this instead. That is where you come in and you'll be like, oh, my chart got edited, right? Desmond told me that my trend line, I drew the angle wrongly. This was the previous, and this is what it's meant to be. This is what we call the coaching chart, right? It's a 30-day, it's a 1-month program. Of course, can be more, but what it does is that you are given a homework. Go in there, practice support resistance, practice trend line, practice channels, practice Fibonacci, and practice the last one. You can use Ichimoku if you want, but that's the weakest one. Go in there and practice. I will, and my team, of course, right, will go in there and see whether you're doing it correctly, right? And we'll correct you. If you draw it this way and it's wrong, we tell you that it's over here. You draw it this way and it's wrong, we tell you that it's like this, right? We are actually coaching you, and that is how you can be a full-time trader. This program, of course, it's for anyone out there, it's not free. But with IronFX, right, we have a special partnership with them. You notice that the domain is vip.ironfx.com. All you need to do is to have an IronFX account with $500 in it. So this is money which you can trade yourself, and you will be able to get access to this coaching chart. Okay? Anyone who registers, who is in this webinar, who then goes on to open an IronFX account, let me just show you how do you open an IronFX account. I think it's over here, right? Will qualify for this, right? So those people who previously already have IronFX accounts, right? They don't qualify, right? Unless you message your RM saying that you were in this webinar and you want access to this, right? Then they'll give you access to it. All right. Personally, for me, right, what I would recommend you to do, right, is when you register, your trading account should ideally, my preference is STP ECN 0 spread. All right. Base currency, you can put whatever you want, and leverage, you can pick anything you want, but whether you want 1 to 500, not much of a difference. This program is just for you to learn how to trade. Okay. So as long as you register, right, after this webinar or during or after this webinar, right, and you put in $500 in your account, you get access to this 1-month training. Okay. I'll be there, right? You've seen how I can teach you. You've seen what it's like. Basically, I'll be there telling you whether you're moving, you're putting your levels correctly. Are you drawing your trend lines correctly? Are you drawing resistance levels correctly? Are you drawing your support levels correctly? I hope at the end of it, right, it's you will be a profitable trader. This program, of course, is very costly for me because I need to go in there and teach everyone, which is why it's only going to be for 1 month, right? After 1 month, I think people with 10 grand in their account can continue the course, right? But for this first month, as long as you have 500 in it, you'll be able to get it. If you already registered and didn't deposit, it's fine. Just put in that $500, right? And message your RM about it. I might have an email which you guys can send to, right? Just to let me see if I have an email that you can send to. $200 will be conditional, but you can send an email to this guy over here. I think it's over here. Oh, where did my chat go? Oh yeah, it's over here. You can send an email to this guy over here, right? And tell him that, yeah, if you can, I preferably $500, but if you're really struggling and you're less than that, you message this guy and tell him that, yeah, you want to put in a little bit money first, lock it in, right? Then over time, hopefully increase it to 500. I believe they should be okay with it, right? So don't tell him I said that, but yeah, just email him and you can CC me in the email, right? Please send it to the correct people, right? Because if you don't send it to the correct people, it'll be just pure chaos, right? Yeah, you can CC me here, right? This is my email with them, right? And once you're done registering, go and send an email to both of us, tell them that you want access. And I basically have to come in here into the settings, right? And I need to find you, right? I need to find you and activate access for you over here, right? I literally need to come in and try to find you over here to grant you access, right? So it's actually reserved for the diamond tier. These are people with, I think it's either 10 or 50 grand in their accounts, right? So it's a very, very special program made available to you guys, right? In this special webinar session that we're doing, right? So the cost has been covered by IronFX. All you need is a live account with, some money inside. Preferably 500 if you can. It would be easier for me to push it through. Otherwise, you have less than that, we will need to put the argument for it. Okay. So, and of course, how do I have a present. Yeah, the last one, the indicator giveaway, right? We are giving away MT4 support and resistance indicator. I'm going to show you how it works, right? And this is for the first 10 people who send through their emails. Okay. I have it over here because I'm using a Mac, so it's a bit crappy. This is the MT4 support and resistance indicator, right? You can toggle. It's a multi-time frame indicator. So you can toggle the strength, right, on like which are the key levels. Notice over here how nicely it identifies the levels, right? Okay, guys, I mean, don't send through your email. I mean, what I mean is send an email to these two people, right, saying that you have send an email to these two people saying that you have put in the money or you want access to it, right? I'm not sure what I said. Did I say? Send an email to these two people, right? And as long as you have open and funded, right, we will give you. These two, D Leong and Notesco and K Georges, you need to copy and paste it because it's a little bit tough, right? So we are going to give out this free indicator, right? It's a very expensive indicator that I built myself, and it's very good at identifying levels. So look at it, right? So it's able at one click to tell you where the support and resistance levels are, right? Notice how nicely it picked this level, right? Price reverse, and it bounce off. It highlights the levels over here. It highlights the resistance levels over here. You can toggle the strength to increase the strength of the support and resistance levels. And you can include the higher time frame levels. You can even put like the H1 levels, the H4 levels. And the beauty is when you combine multiple time frames together, right? So we're giving 10 of these out, right? Very, very useful indicator for finding where to buy and sell from. You notice price has been reversing off this so many times. It's ideally a good level to place a sell trade on. This support level, so many times price has bounced, could be a good level to, to take a buy order, right? So whichever, time frame you jump to, you can toggle the strength and see where are the strong levels you can buy and sell from. If you go on like Google and you search for best support and resistance indicator, this is number 2 or number 3 out there. So we're giving the 10 of it out to the first 10 people who drop us an email and say that they have opened if you haven't opened a live account yet, open, or if you have a live account already, go deposit that $200 or ideally $500, and you will get access to this indicator. And of course, you get access to this over here, and you get access to this coaching charts where we can teach you, how to be a better trader, right? So it's a 1-month program. At the end of it, hopefully, whether you want to take a prop firm test, we hope you pass. Whether you want to be a profitable trader, we hope you'll be the stepping stone for you to be a profitable trader, right? Literally anything that you do over here, right? Any level that you just drew, right? It's like normal charting. You move it here, right? We can see every single thing that you do, and we can guide you whether you're doing it right or wrong. Okay, so that is a special offer that IronFX has, right? So go register for an account with them. If you haven't, I think it's over here. And if you have, right, go and put in the $200, $500, and don't forget to drop an email to these two people over here, right? I've put it over there, right? I'm going to paste it again. Drop an email, say that I want access to it. It is technically all tracked in the back end, but no harm dropping an email saying that you have put in the money or you have opened an account, right? So it's just a 30-day program. I hope you guys get access to it. Personally, for me, I'm not selling any costs. You don't need to pay a single cent. Technically, at the end of 1 month, if you want, you can take out the funds. Although we hope that you continue to maybe put in more funds and build your trading journey with IronFX. But yeah, you know, this is usually reserved for the $10,000 and $50,000 diamond tier. So go ahead, grab the chance, right? IronFX has sponsored this training for you guys. So go grab it with both hands, all right? Thank you, Mohammed, right? Thank you, Dion, right? I'm glad you enjoyed today's session, right? It was a great time with you guys too, right? Let me stop my screen sharing rather. Yeah, stop screen sharing, right? There we go. Yeah, it's been a great session with you guys. Thank you for staying throughout this session. I hope you found it useful, right? And you know, I hope to see you guys in the coaching program. I think we're going to start it probably later this month or earlier in May, right? So do join, do get signed up. We will have a wonderful journey, right? I'll teach you everything you need to know in 30 days, how to be a profitable trader. Seize this opportunity. All right. All right, guys. Thank you, Christabel. Right. Sorry, using a name as an example throughout this entire session. Thank you, Govender. Right, Elliot. Right. Right. If you don't have 500, maybe 200 first. Right, and then we'll make an argument to maybe increase it over time. All right. Thank you, everyone. It has been a pleasure. Right. Right. I can't. Right. Too many of you guys sending messages through. Stay safe. Trade safe. Hope to catch you guys in the coaching program, right? And yeah, it's been a pleasure having you guys. Thank you. Have a great day, guys. Bye-bye.